Investment Research Report, Occidental Petroleum, NYSE, OXY. Executive Summary. Occidental Petroleum OXY is a premier, large-scale U.S. integrated energy enterprise occupying a unique strategic position in the market. The company masterfully bridges the gap between traditional oil and gas exploration upstream and forward-looking low-carbon energy initiatives. Backed heavily by Warren Buffett, OXY delivers robust current cash generation while actively future-proofing its business model for the global energy transition. 1. Core business, the powerhouse of U.S. shale upstream. OXY's primary revenue engine is its upstream sector, which focuses on the exploration, drilling, and production of crude oil and natural gas. Dominance in the Permian Basin. OXY is an undisputed market leader in the Texas Permian Basin, the most prolific and cost-effective shale play in the United States. Additionally, it operates high-tier assets across the Denver-Julesburg DJ Basin, offshore Gulf of Mexico, and the Middle East. Strategic Portfolio Concentration 2026. Update. While OXY previously maintained downstream operations through its chemical subsidiary, OxyChem, it successfully finalized the sale of OxyChem for approximately $9.7 billion in January 2026. The entire proceeds were immediately deployed to pay down corporate debt. This transition allows OXY to fully focus its core capabilities on pure-play energy production and advanced carbon management. 2. Future Survival Strategy. Global leader in carbon capture, CCUS. OXY is not just a traditional oil producer, it is one of the most committed global energy giants pioneering carbon capture, utilization, and sequestration CCUS technologies. Direct air capture DAC innovation, led by its dedicated subsidiary 1.5, OXY is actively constructing commercial-scale DAC plants designed to extract carbon dioxide directly from the atmosphere for permanent geological storage or industrial recycling. Transition to a carbon management enterprise. Management's long-term vision is highly ambitious. Even if global oil demand eventually peaks and declines, OXY plans to unlock a new, secular growth engine by providing carbon management services to heavy-emitting industries worldwide. 3. Market attention, the anchor of Warren Buffett's portfolio. OXY has gained massive capital market fame primarily due to aggressive, high-conviction investments by Warren Buffett's Berkshire Hathaway. Berkshire Hathaway's major stake. Berkshire Hathaway has consistently accumulated shares, building a massive ownership position exceeding 28% of OXY's outstanding stock, making it the company's largest shareholder. Investment rationale. Beyond capital gains from oil price momentum, Buffett heavily favors CEO Vicky Holub's disciplined capital allocation. Key pillars include aggressive balance sheet deleveraging, rigorous cost management, competitive shareholder return frameworks, and resilient cash flow generation. 4. Operational excellence and financial resilience. OXY's recent financial and operational metrics reinforce its structural efficiency and ability to generate premium returns. Exceeding production guidance, total Q1 production reached 1.43 million barrels of oil equivalent per day (BOED), successfully outperforming the upper bound of management's guidance. This outperformance was driven by superb operational efficiencies in the Permian Basin and the Gulf of Mexico. Robust free cash flow (FCF) generation. Despite flat year-over-year global oil prices, OXY generated roughly $1.7 billion in free cash flow before working capital adjustments. This represents a staggering 52% year-over-year increase from continuing operations, proving the strength of its structural cost reduction programs. Accelerated debt paydown. OXY aggressively slashed its total debt to $13.3 billion in Q1, smoothly tracking toward its long-term target of $10.0 billion. This deleveraging effort has successfully eliminated nearly $550 million in annualized interest expenses. 5. Macro catalyst. Asymmetric upside from geopolitical conflicts. USIRAN. For upstream-focused producers like OXY, geopolitical supply shocks, specifically military escalations between the US and Iran, act as explosive catalysts for stock price appreciation, direct profit and cash flow surge. When geopolitical tensions push crude benchmarks into the $100 to $120 per barrel range, upstream margins expand non-linearly. Because OXY maintains a structurally low price hedging ratio, its revenue is directly exposed to spot price surges, translating spikes instantly into explosive free cash flow. Geographical premium of mainland U.S. production. A major crisis in the Middle East poses a threat of logistics blockades, notably at the Strait of Hormuz. Because OXY's core operational footprint is safely located within the domestic U.S. Permian Basin, It remains entirely insulated from physical supply chain and maritime transit disruptions, capturing the full economic upside of surging global oil prices without the operational risk. The ultimate stock market portfolio hedge. During periods of severe geopolitical stress, systemic equity indexes often contract due to rising inflationary pressures. Institutional asset managers aggressively rotate capital out of high-beta sectors and into protective commodity hedges. OXY acts as a premier safe haven, historically demonstrating strong market decoupling and outperformance alpha generation when the broader market corrects. Conclusion. In summary, Occidental Petroleum OXY represents a highly compelling asymmetric investment vehicle. It generates immense near-term cash flows backed by premier U.S. shale assets, possesses a multi-decade growth runway by its pioneering carbon capture tech, and is heavily anchored by Warren Buffett's seal of approval. Furthermore, its structural setup provides an excellent defensive hedge with explosive upside potential during macroeconomic and geopolitical crises.